Hello everyone, this is Shrikant. I'm the CEO and founder of DigiLi. As DigiLi, the name suggests, we focus on building partnerships in the digital domain. We are based out of Singapore and we are certified fintech. First, let me send warm wishes to all of you as the pandemic ravages through societies, countries, as well as families. We all need to remain safe and wish you and your close ones health and safety. Today, we want to talk about an interesting topic, which is important but generally ignored. And we are going to discuss how open banking and digital banking is going to benefit because of trust economy and its underlying components such as digital identity and data privacy. My personal belief is that trust economy is the cornerstone of future finance. It's important to establish trust between participants of the economy. As we know that there is going to be a proliferation of digital, which is going to create immense impact on digital commerce. And a large part of our lives, including entertainment, including communication, education, all of that is moving on to online world. And we know that around 4.5 billion internet users are going to access different type of functionality, and that creates immense opportunity. We know that open banking is here to create immense impact on our lives, and open banking is just the beginning. What we see is the revolution, which is open data revolution, open economy revolution. Large part of the organizations as well as countries are now bringing regulations as well as tapping into new business opportunities to ensure that they are able to build new business models to deliver customer experience as well as comply with the regulators. We also face certain challenges in this particular dimension, that having a lack of openness of data between different entities forces us to re-register, do eKYC or KYC again and again. So there are a lot of pain points which exist without having the sharing of data. But this is a right revolution and it's on the perfect path. We also know that the banks, and these are all incumbent banks who are well-established banks across the world, have taken advantage of open banking by having partnerships in one of the most unexpected places. Now, what is important here is to realize that these partnerships are quite diverse. For example, if you take DBS, OCBC, Citi, all of these are partnering across different industries. OCBC recently launched the healthcare domain and platform for their customers, while BBA focused on largely financial services partnerships. Similarly, the new banks, which are neobanks like Monzo, Revolut, they learned this quite early in the game, and they have been partnering with not only digital natives, but also physical establishments. For example, Sterling Bank partnering with the UK Post Office to get access to 11,500 physical branches is an amazing collaboration, which you can see digital banking extending its arms and wings to the physical world. Now, all of this is important. We need to understand that in the past, it was the organizations who were competing with each other. But now these ecosystems, which have been built by these partnerships, by these collaborations, are actually creating the competitive advantage for the companies. We also need to know that open banking offers stacking of different segments of business models for financial services. Certain components or certain corporations focus on only client relationships. Certain companies focus on products, and certain organizations would continue to dominate the financial resource management where large-scale licensing or government regulations come into play. Now, there is another layer of tech platforms which is coming in. For example, TrueLayer, Railsbank, Fedor, all of them are creating technology companies which are enabling financial services. But at the end, what is important is to create trusted digital ecosystem. And what we are going to see now is the important dimension of what constitutes trust and what are the challenges we see in the trust ecosystem. That so far there is immense opportunity. 60% of GDP digitized in the by next year, 70% of the new revenue coming from the platforms. But this all is leading to multiple challenges. And we've all experienced that, be it healthcare, be it ports, be it any different parts of the ecosystem, they've been attacked. And there have been losses which organizations have faced. There are certain business decisions which were delayed because organizations could not trust their counterparts, be it individuals, be it entities. Today, corporates lose whooping 3 million US dollars per minute in 2021, and 60% of those attacks are happening in financial services. One of the things which is missing, and this is an important dimension to acknowledge, that the trust has to be bidirectional. Now, so far, what we have seen is the KYC and multiple other norms are focused specifically on individual and individual proving their credentials, creditworthiness to the enterprises. But where we need to move towards is the bidirectional trust. Where can an individual trust the enterprise? Can an individual make sure that they are dealing with the right enterprises? And we have seen certain examples of that in the last year, where a lot of unlicensed money lenders, apps, illegal apps were coming in. Fictitious shell companies come in when import-export teams are not able to identify which companies are those. There are unethical companies where the customers probably do not want to deal with, but this is not transparent, and hence trust is missing a bidirectional dimension in this particular era. What we also need to realize is there are 4 dimensions to digital trust. The first dimension is digital identity. Why this is important is to be able to identify uniquely and positively the individual as well as entity whom you are dealing with is the entity whom you are approaching for business. And digital identity, while it itself may not offer so what, it creates so many opportunities to identify and solve for many challenges which we face today. Data privacy is important, and data privacy is essential for creating trust, because when we are sharing data, we expect organizations as well as individuals to make sure that they are able to manage the data, be it at rest or in transit. Now, in terms of governance, there are certain dimensions which are evolving. We will look at some of those dimensions. We will talk about 3 main areas, which is what is the intent of the individual, what is the context in which the individual is sharing data, as well as the consent which the user is giving. One of the big challenges today we face is that these are all treated when we look at the risk management mechanism, whether it be it underwriting, be it lending, or any of these organizations, they are pretty black and white. A large part of the organizations or the early stage companies are really facing the challenges where they are still building their reputation, and they may have certain countermeasures which can enable them to move forward with some of the facilities in the financial. When we look at these 4 dimensions of digital trust, one is essentially identifying the individual and enterprise in the digital realm. Second is ensuring that there is data privacy and corresponding laws have been and regulations have been addressed. There is governance of entire data life cycle, and we'll talk about that. And this last one is how do we measure the trust and quantify the trust between the participants of the economy. Now, if we just focus on digital identity, it is an important topic, and it's really gained a lot of traction across the world. Essentially, examples of that, good examples of that include Singapore, India, Sweden, Estonia, where governments are leveraging digital identity, which is given to their citizens for accessing services which are offered by governments. And for example, in Singapore as well as Sweden, organizations like banks are able to authenticate their users to via the government ID, which is being provided by them. What this does is essentially helps very easy onboarding. It lowers cost of customer acquisitions because you've been already identified and you've been already recognized, your KYC is already taken care of. Hence, a lot of onboarding trouble is saved. It also helps organizations to build association with a single view of customer, and that strengthens their relationship in the long run. One of the important things which comes out as part of the digital identity, and we've seen this happening across many countries, is the digital experience or the customer experience can be completely reimagined because you can then embed digital identity and authentication across different steps. And in some cases, you could provide customer service. In some cases, you could enable and authenticate financial transactions. So this complete reimagination of customer experience helps organizations to leapfrog from their digital transformation perspective. Now, one of the challenges or one of the things where we definitely need to see more traction is that whether it is a self-sovereign identity, which is the identity which is self-proclaimed as well as managed by the individual, and there is no other entity providing any specific endorsement of that, versus the federated identity where government offers certain form of identity and that identity overlaid with the digital life components of the individual are covering the federated identity. Now, all of this are today largely focused on individuals. What we would like to see is the digital identity to be created for entities. Now, there are certain countries where the digital identity for enterprises, for SME, is picking up traction, but it's important that the linkages between individual identities as well as the entities or enterprise identity continues to be built. What we also saw now as part of data privacy, that open banking as well as data privacy regulations across the world are evolving very fast. While open banking does not necessarily need regulations, and a large number of use cases across Singapore, North America, different parts of the world are driven by the business ambition as well as the innovation which is driving on ground, there are certain enablers which are coming in, and countries like India where account aggregator could play an important role. So there is regulatory support which is growing big time for data privacy, and there is an important dimension of the customer rights and financial literacy as we need to build those when we offer these regulations, because a large part of frauds are also addressed or coming via the social engineering way, and customers are not aware of what data they should be sharing and what data they should be holding back. Data privacy helps organizations to get respect, and the quality of interaction goes up significantly. Business decisions are going to be significantly faster. In an open banking environment, one of the challenges we face is how the data moves across different entities. And even when they are doing innovation, are they really sharing the data in the right context, right intent, and with consent of the user. If you think about these three dimensions, context is primarily the scenario or the situation why data sharing must happen, and essentially identifying the purpose of data sharing with this specific scenario or a use case which both organizations would have agreed. Second is the intent, which is very close to why the customer is ready to share the data. And that data is going to create, probably facilitate some of the customer offerings or services for which the customer has applied. Now, consent is a little bit deeper. We will see in the next slide that how consent is really impacting some of the broader dimensions, and there are some modular uh, components of consent. But on a broad level, consent is about ensuring that the user is party to this particular transaction, and he or she is willing to share that data, and that data is going to be used for the right purpose and for the right context. Let's contextualize this a little bit further. Most of us have applied for credit cards either in a digital manner or a physical form. And when we share data, which is personally identified information with the respective parties, we realize that there is a reason why we are applying. We are interested in getting credit card as a service, and we are interested in participating in the economy by having access to credit. Now, these are the context and intent. But when we want to share this information, how can we make sure that the data is not used for something else, or a fraudster is not going to use that information for doing certain other type of transaction or acquiring SIM card? The same thing applies with consent. Now, largely organizations which are holding customer data do not involve customer into the journey. They generally share this information between organizations. And I'll give you a simple example that somebody who's on e-commerce website, the e-commerce website offers a partnership with a bank, and through open banking, both of them are connected. And these organizations now want to capture the customer and ensure that the whole end-to-end journey for the customer is seamless. Now, most of the times when the customer is applying for loan, the data which is being shared with the bank, the customer has no clue for how long the bank is going to share the data, whether the data is going to be available for certain duration, or the bank is going to keep it into its database. Now, there are different dimensions to this, and we need to look at them one by one. But what exactly consent covers, right? Now, any individual who would have shared certain data should have flexibility to modularize or granularize the data to the level he or she is comfortable with. That is the first part of the consent. The second dimension of consent is also important to expire the access which is given to data. So data sharing between organizations or individuals to organizations should have a time-bound stamp where the expiry would happen automatically on a particular date. Now, there is another dimension where a lot of digital identity standards talk about is the consent reversal, which is essential because your business situation may change and the user should have flexibility to reverse the consent. And one of the most important dimension is to have audit trail available where the provability of the transaction, consent, as well as the data, the person or entity who has accessed the data should be able to be should be provable. Now, if you think about how do we measure trust, measuring trust is important for maybe not the large organizations because they have very well established relationships, but SMEs who are suffering because of pandemic, who have to go digital and who have to adopt digital. Today, they might be facing challenges on financing. They might be facing challenges on proving their capabilities. Now, if we are able to build a scorecard, which is in the verifiable form, for SMEs who can build their own reputation over a period of time. And that digitized format, data, as well as the verified information or certain milestones across the life cycle of the SME can also be captured. Now, these are important dimensions. If you look at some of the SMEs who get benefits due to the ESG credits, if they are able to prove that the environmental dimensions are covered, and they may be able to fulfill some of the important aspects of it. In this particular slide is an opportunity for enterprises, small, medium, as well as large enterprises, to build their digital twin in the entire digital realm, and to enable some of these features to benefit from the digitization of some of the capabilities. Now, where do we go from here? Organizations have to focus on four actions going forward. One is they need to look at all the new technologies as well as the digital banking infrastructure, which is open banking or digital banking infrastructure, should take care of the trust dimension. And when we say trust dimension, it may sound a bit futuristic, but things may move very fast. And we may see some of these digital trust as well as digital identity and data privacy regulations coming in very quickly. One of the benefits of digital trust is now the complete reimagination of user experience and the user journeys. So it leaves with a lot of opportunity, a lot of money on the table for organizations to revisit their digital transformation and look at some of these new ways of doing things and enabling customer experience in a completely reimagined way. We need to also think about new technology which is evolving. Now, a large part of what I mentioned about is still evolving. We see some good technologies with blockchain addresses some of the challenges, but there are expectations which are set with blockchain. There are complications which might come with blockchain. So choosing the right technology and keeping your eyes and ears open on new technology is very important. What's also going to happen with digital trust is the operating model is going to evolve as we go further, because you may find a lot of benefits coming out of the new trust model, where some of the post assessment or post validations are not required. Reconciliation may not be required. So all of those redundant activities can be eliminated, and it is possible that organizations can revisit their operating model. Now, this is a topic, very interesting topic, which will enable open banking as well as digital banking transformation. And please reach out to us. We look forward to address your queries. Thank you very much.